JB here. Hope everyone's doing outstanding. Wednesday, March 26th, 3:30. On this Friday afternoon, talk quick about the market. Some names I'm looking at go from there. S&P taking on the chin, down 1.3% here. Not much in the way of news or catalyst to speak of. I mean, if you look at the headlines, they say the tariffs, right? I guess 4 o'clock, POTUS about announce updates on auto tariffs. I mean, on what planet's everybody been on? I mean, the tariffs, like there's going to be announcements. Do you think they're selling off in anticipation of it? I mean, it could be rallying in anticipation, and the headline could just be switched if we are in the green. We just saw it this morning. You look in name like Nvidia, which had accounted for a large percentage of the market losses at the open. Right at as the bell rang at the open, it just tanked. It was 120 and change or 119, and just boom. Next thing you know, it's 114. Uh, let's see here. I don't actually do I have why don't I have the 15 up here? Uh, yeah, did it open? It opened maybe at 118, 119, and then it just to the downside, 115 by 10 o'clock. And then you take a look, it was like someone hit a button, all these other momentum names, the Reddits, the AppLovin, Carvana, um, Broadcom. I wouldn't even call it Broadcom, but it kind of is in that scope. MicroStrategy, all these names are taking on the chin right at the open. It's like yesterday didn't happen. Yesterday we had one of the tightest ranges of 2025, and then boom, we're back to selling. So, uh, they keep floating the recession where you keep seeing headlines, right? So and so gives a 25% probability of recession in the next 12 months, and that seems to be like the recurring theme. And now this new possible catalyst, right? The U.S. is not going to be able to pay its debt. Uh, X the default day, X day they call it, right? It's going to happen anywhere between July and October when the U.S. is going to be able to not pay its debts for the first time in its history. That would be the only major concern. That's probably the next possible like black swan, or they'll probably pull this rabbit out of the hat with a debt downgrade, which hasn't happened since I don't know 2015, where it's pretty much the credit rating of a country is the probability of them not paying their debts, right? So when you have triple A rating, I mean, to think that you would even downgrade the U.S. debt is kind of like comical in one sense, but obviously when you get a logjam, political logjam where they can't come to agreements in regards to spending and the debt ceiling and things like that, I mean, that raises some uncertainty. But anyway, so who knows what it is here today? And I was talking about adding some put hedges on the break under 570 on the spot, the 200-day moving average. I start looking around, and the names that I would look at for the puts, the risk reward to me, unless there's some crazy continuation tomorrow, it just doesn't jive. I was looking at Goldman Spectacular, and it's sitting here. I mean, it's down 2%. So even if you got Goldman Spectacular weekly puts yesterday, you're up 120, 130% on the out of the money strikes. And then you start looking the 540s, which you're talking another 6% move in the next 2 days. Those are 60 cents, or well, actually the 38 cents. 545s are 60 cents. So I mean, is it gonna get another 6% decline in the next two sessions? It's tough. So that's why, in lieu of trying to uh, waste money, because I mean, when I get a hedge, it's not like, of course, I want it to pay out, but I don't have a lot of long positions, so I might as well. I'll just sit on my hands, look for opportunities to play bounces, or at least that's how I'm playing out right now. Uh, you know, not saying that you want to paint the picture of a bear flag either on the S&P, but if the markets don't find footing, we consolidate around here. I You almost can make the case that we have a bear flag setting up on the index, right? So don't want to see that happen either. Would love to see it close over that 200-day moving average today. It doesn't look like that's going to happen here, but we've seen the magical hand come in at the end of the day before. Wouldn't rule it out, but that's kind of like a key spot that I got to see that get back over at least tomorrow. Also today, the GDP now update came out. The Atlanta GDP now came out exactly as the last read did on March 18th, negative 1.8%. So, I mean, if you're taking that data and then you start to extrapolate that out and say, oh, well, looks like quarter two might be negative, then, I mean, that's a recession, right? So, and then I always take the other side of the fence too, is no one's really talking about the US dollar getting destroyed. I mean, down over 4% this year. If your company, especially international exposure, multinational exposure, 4% increase in profits because your currency is weaker. So, all right. Anyway, so that's kind of the overall market. Also, if you take a look at the amount of stocks trading over there, 200-day moving average on the S&P barely ticked. I mean, it's down 0.8% in regards to the amount of stocks under. So well, above. So it has, maybe that's like two companies or one company ticked under its 200-day moving average. So despite today's pull, that kind of the momentum or the market breadth is not as bad as you would think with the S&P down 1.3%. And the other side of it too is the Dow, which is kind of like holding up there. So, if it's because of auto tariffs and that's the concern, that's why stocks are selling off today. I mean, wouldn't you think some of the major larger names, not the tech names, would be destroyed? Why would Nvidia being sell off on auto tariffs, right? So anyway, create the narrative to fit the sell off, right? If if there was some other announcement today, it'd be because of that. But either way, market selling off kind of Friday. It's like, again, like someone hit a button. Hopefully, someone will hit the buy button tomorrow. We get a little bounce, get back over that 200-day moving average, and you know, I uh, I keep saying I don't have my bull horns on or bear horns on. Maybe this is the new trading range for the foreseeable future for the next couple of weeks. And I'm kind of stinks, right? You don't want to be sitting in calls and then have those premiums get destroyed because the markets decide, hey, today we're going to sell off. Tomorrow we're going to rally. The next day we're going to sell off. So hopefully it's not as wide a chop, but I mean, maybe that's the new reality, at least for the short term. All right, so now individual names. So GameStop, thankfully, able to trade that one. I mean, at the morning, I was thankful I closed the weekly strikes, but those actually were up over 100% later in the morning. But I talked about in the rant this morning and yesterday, a little bit in the afternoon. I think it's just a great story now. And if you have a new a business or at least an addressable market that they can reach, the company, I think it's $140 million in interest income last year. I mean, that's phenomenal, right? If their business wasn't just doing Bitcoin treasury asset, if they weren't looking to buy Bitcoin and use it as a treasury asset, and they were just making money on interest and then pile that interest back into interest bearing assets, I mean, that might be a good business too. But I just think it's a good story. And you take a look at Ryan Cohen. I mean, if there's any CEO out there, I mean, he's got to be like the top 10 or 15 that you'd want to say, hey, here's $4.7 billion of cash. You have no debt. Drive some growth, create addressable market and grow it and become a profitable high growth momentum company. So looks like it's in the stages of it. And it's funny, they don't have a they don't have a conference call after their earnings because I don't think he cares about the conference call. He's here. He wants to be a monster business. So we'll see how this all plays out. I had the 35, so I locked some in at the open for nearly 100%, and then as it started to chop around, I went and got the 40s just because I think this momentum is going to continue. To me, it's not a short squeeze anymore. People say, oh, they're going to squeeze the shorts. To me, it might be a growth story going forward. And then for now, it's speculation mode, and speculation, in my opinion, it's better. Stocks tend to do better when you speculate on the positives, where I think there's the odds of them creating value and Ryan Cohen creating value for the company are a heck of a lot better than they were yesterday, the day before, last month. So because of that, I think the stock trades higher. And you take a look back at the start of the year, it was $34. I think it trades up near that in the coming weeks. But I didn't want to be in a spot with the volatility that someone comes in, maybe there's a downgrade tomorrow or what have you. So I locked the last of my 35s in for 100%, and I'll just hold the 40s. And then if we break over 30 in the coming days, I'll look for more strikes. And then that's it was funny. You look and like the April 50s were getting pounded. So all these strikes, again, maybe some people are having deja vu and don't want to miss out on the FOMO. But I just think you start looking at the story. It's a great story. All right, so that's GameStop. So thankfully able to make some money today on those. And then the other names, and you take a look at Wayfair, and Wayfair is actually off the lows here this morning, but open at highs, was in the green, right near $39, and then just gave it all back. Was down over 6% earlier, down under 36, has bounced $2 here. Still like this as a move, especially if the markets find footing Thursday and Friday for a move back over $40. I'm not convinced enough or don't have enough conviction to add more strikes. I'll just hold my freebies. If the market does find footing, it breaks over 41, I think it heads higher. So, but thankful again, similar to some of these other names, to have locked some profits in. And then there's Dell, and Dell looked great at the open, all the way up over $100. Looked like it was on knocking on a door of a 101. My calls were back in the green, and then it just sold off as Nvidia and all the other semis started to pull. I was actually looking at 106s or 105s for next week, but again, who knows if the sell button is still in effect tomorrow. So I don't want to be in a spot where I'm holding more calls on that. So I still have strikes into next week. If it starts to find support tomorrow, I'll look for more calls. If it falls, I'll wait. I'll wait for support. I mean, it was all the way down 89 and change back at the start of March. I'm not saying it gets down there, but if it did, I'd be looking for more calls. Then the other names again, you take a look at J.P. Morgan. It's down 1/4% today, and if we're in the midst of a pending recession, you would be like, here's J.P. Morgan. It should be down a heck of a lot more, especially its bounce. I mean, it was in the 220s all the way up to 250 in a matter of 3 weeks or 2.5 weeks, and it's barely down today, considering market's down. So to me, that's kind of like a sign. But then the other side is if you've gotten the puts as a hedge, the puts aren't going to pay much. I mean, let's see what the JP Morgan, and you would have had to get the JP Morgan puts at the open when the stock was at highs. But I mean, the in the money or let's say the 255 puts are up 11%. You had to pay almost $5 for them. So the risk reward there to make 50 cents, I mean, that's just not my risk reward, especially with a volatile market. So and then you look at some of these other names, and Goldman Spectacular I was talking before, it's down 2%. Another name, man, was down all the way under 520 on that red. I forget how 2.5 weeks ago. Here it is, all the way back up near 590, and the puts the risk reward just not there. So I'd rather just sit on my hands. And then the last one is kind of like I was just posting in the chat room. It's like getting you get a wound, you get salt poured in your wound, and then someone stomps on it, right? That's kind of like Visa, MasterCard feel like if I'd gotten puts on those names today as a put hedge. I mean, Visa's right near its 50-day moving average again, and I figured if it breach, you would think there would be continuation. It's just stubborn. So either the financials are kind of like showing a sign that, hey, maybe this is just a one-off reset again in the tech area or not. I don't know. I was talking about the FHA loans this morning around delinquencies and what have you, right? The Federal Housing Administration, typically that's a sign that, another one of those omens, right? But I mean, there's omens over the years that people always point to, of course, the consumer confidence recently, but it just seems like over the years, everybody's, it used to be the amount of margin debt on the market relative to to market, right? So they would say, oh, the most amount of money is held, margin money is out there, right? So there's the most amount of money on the market margin levels, right, are at their highest level ever. But it'd be like, well, the market's up at highest levels ever. It's like a function of the market going higher. But that would be a great data point. Bears used to, I mean, they still to this day still point that out. And one of these days they'll be right, right? I mean, we'll have a crash, the margin will get wiped out. There'll be short calls and margin calls, and so rants for other days, but we'll see. Hopefully, again, hopefully today's a one-off kind of reset button. Market finds some footing. We don't have a bear flag set up on the indexes, and then we can at least resume a bounce to that 580 and change handle. I think that would be a nice little target there. If not, then 563, right? I hope that doesn't come in play before the close here in 17 minutes or tomorrow. If it does, then then I'll start looking for maybe some ETFs, the FASs, the TZA calls. Maybe I'll look for some of those bear ETFs just to offset. But again, I'm not in so much that I need to hedge, right? To me, I'd rather play for bounces, save that capital, play for bounces, than try and do some of these hedges where I don't think there's. I mean, if there is downside, I think it's limited. And if we do gap down tomorrow, I think it'll be a great bounce opportunity. And all right, that's it, folks. Let's have a great day. I'll be back. Rock and roll.